Investing might seem intimidating at first, but understanding the right options can pave the way for a secure financial future. Whether you're looking to maximize your retirement savings, reduce your tax liabilities, or diversify with alternative assets like precious metals, this video has you covered. We'll take a deep dive into the top types of investments for beginners.
Let's talk about the 5 most frequently asked questions about retirement accounts. Frequently asked question number 1, can you contribute to both an IRA and a 401k? The answer here is that yes, you can do both, but if you are doing both, just know it takes a lot of money every single year to maximize both of these accounts. Frequently asked question number 2, what's the most optimal order for investing in retirement accounts? I think you should contribute to your 401k up to an employer match because that's going to be free money. Then max out the individual retirement account due to flexibility. Lastly, after that, then you can decide if you want to continue contributing to your 401k or not. Frequently asked question number 3, what types of funds should I invest into in my 401k? All right, the answer for this is pretty simple. You want to stick to index funds with the lowest fees possible. So anything with an expense ratio of less than 0.2% is really good. Sometimes you'll see some even up to 0.5%. I think that's still fine in general because 401k plans generally have higher fees. But if it's close to 1%, that's when you want to kind of have alarm bells ringing off in your head. The answer to this is that you can definitely have both. Typically, people just have one, but the contribution limit across all 401ks is $23,000 per year. So that means you can't do $23,000 in a traditional 401k and then $23,000 additional dollars in a Roth 401k. It's just $23,000 for all of them. Same thing goes with the IRA versions. It's $7,000 for those under the age of 50 for both traditional or the Roth IRA versions. I don't think it's a bad thing to have both a Roth and a traditional. In fact, it's just a little bit more to keep track of. But if you want to keep things simple, then you want to convert the traditional into a Roth and just keep it all Roth. All right, that was the video. If you still have questions, make sure to leave them down in the comments below, and either I or someone in the community will hopefully get back to you. For the most part, if you do have questions specific to your own situation, what you can always do is call your own brokerage that is running your 401k or your IRA plan in case you have questions about that, or you can talk to your employer. They usually have good resources to answer these types of questions. Make sure to subscribe to this channel for more finance and investing content as well as retirement content. And if you're interested in another video related to retirements, I will leave that up for you guys right up here so that you can check that out after this video. All right, I'll see you guys in the next one.
One of the most important decisions in retirement planning is choosing between a traditional or Roth 401k. This clip outlines the differences and helps you decide which one can better serve your long-term financial goals. For those looking to diversify even more, Augusta Precious Metals offers a way to protect your savings with gold and silver, which could be a great hedge against inflation.
Now, one of the best benefits of the traditional 401k is that it actually lowers your taxable income. So what do I mean by this? Well, let's take an example where you're earning $75,000 a year. Let's say you contribute $10,000 into your 401k. Well, lucky you only will owe taxes on the remaining $65,000 a year that you're earning. Instead of owing taxes on $75k a year, because you contributed that $10k to your 401k, that part is not taxed, and so you get a lower amount that you're actually taxed on. Effectively, in a state like California where I am, that means you'll save $3,814 in taxes, and you're also contributing to retirement at the same time, so it's basically a win-win. The maximum that you can contribute to a 401k in the year 2023 is $22,500 if you're under the age of 50. Now, if you're over the age of 50, you can actually contribute more because it's a catch-up mechanism. The government allows you to kind of catch up in case you're behind, and you can contribute up to $30,000 a year in 2023 alone.
Tax efficiency is key to maximizing your investments. This clip explores various 401k strategies to help reduce your tax burden while growing your retirement fund. Remember, minimizing taxes isn't just about accounts. Diversifying with tangible assets like gold can provide an extra layer of protection.
The biggest difference when it comes to the Roth versions of these accounts and the traditional versions is that in the Roth version, you are funding them with after-tax dollars. So in the Roth 401k, that means you've already paid taxes on the money that you've received, and then you're taking the after-tax money and then investing that or contributing that into a Roth 401k. The biggest benefit of having your money grow in a Roth 401k account is that all earnings are tax-free. If you think about how big your balance is going to be growing by the time you retire, it's going to to be really advantageous to have it all tax-free, especially if you're the type that still likes to work when they are a lot older. Personally, I just like knowing that whatever I earn in a Roth account is what I'm going to be keeping at the end of the day whenever I make that withdrawal. Now, in terms of contribution limits for the Roth 401k, it's exactly like the 401k, the traditional 401k, which is $23,000 a year for those under the age of 50 and $30,500 for those over the age of 50 in the year 2024. The Roth 401k as of 2024 will also not require you to have required minimum distributions, which I think is pretty fascinating.
The Roth 401k provides incredible advantages with its tax-free growth. In this clip, you'll learn why so many experts recommend it. And remember, adding alternative investments like precious metals can further secure your financial future.
The first is that with an IRA, you don't need an employer. All you need is what's called earned income. So that means that you could be a contractor without a full-time employer, yet still open an IRA. However, I do want to make one clarification, which is you can have a 401k and an IRA at the exact same time. The other biggest difference with the traditional IRA is that the contribution limits are a lot lower compared to the 401k. I'm going to put them on the screen right now, but you can see that the 2023 contribution limit of the traditional IRA here is $6,500 for those under the age of 50, that's per year, and $7,500 for those over the age of 50. For 2024, that number is actually increasing to $7,000 a year for those under the age of 50 and $8,000 a year for those over the age of 50. Now, one caveat and important thing I want to tell you guys about is that if you're watching this in the year 2024, but it's between January and tax day, so let's say it's March 15th, so it's before tax day of 2024, you can still contribute to the previous year, 2023's IRA contribution limit. That's true for any year. That means if you haven't contributed to your IRA for the previous year, yet it's still before tax day, you can still do that.
As you watch this clip on maximizing your IRA contribution limits for 2024, keep in mind how these strategies can optimize your growth. Also, consider diversifying your IRA with Augusta Precious Metals. Their gold and silver options could be the perfect addition to your retirement portfolio.
For the Roth IRA, contribution limits in the year 2024 are going to be $7,000 under the age of 50, that's per year, and $8,000 over the age of 50, also per year. Now, there are a few differences that the Roth IRA carries compared to the traditional IRA that we really need to talk about. First is the Roth IRA 5-year rule. This is a specific rule tailored to the Roth IRA, and this basically states that you must wait at least 5 years after your first contribution to a Roth IRA in order to withdraw your money tax-free. That means if you put some money into a Roth IRA and you invest it in, say, Apple stock, and let's say Apple stock goes up 500% in the next year, even if you withdrew it within that same year, your earnings are not tax-free yet because it hasn't met this 5-year rule. So whenever you're contributing money into a Roth IRA or any retirement account, you should be thinking this money is for way later on. The other interesting thing about the Roth IRA is that it's very flexible with the contributions that you put into it. So let's say you put $7,000 into your Roth IRA, you can withdraw any contributions that you've ever made to the Roth IRA without any penalties. This is in stark contrast to the traditional IRA, which doesn't allow you to withdraw basically anything without paying a 10% penalty to the IRS.
The Roth IRA remains one of the best vehicles for building long-term wealth. In this clip, we discuss key contribution limits and rules that you need to know for 2024. If you're looking to diversify your assets within a Roth IRA, consider adding precious metals to your portfolio.
But now let's switch gears and talk about the Roth IRA, because I think this is one of the most powerful accounts that anybody can have. For the Roth IRA, contribution limits in the year 2024 are going to be $7,000 under the age of 50, that's per year, and $8,000 over the age of 50, also per year. The other interesting thing about the Roth IRA is that it's very flexible with the contributions that you put into it. You can withdraw any contributions that you've ever made to the Roth IRA without any penalties. The other nice thing about the Roth IRA is that it's not subject to the required minimum distributions as well. And the other caveat that I need to bring up about the Roth IRA is that it actually has what's called an income limit. So that means if you earn more than $146,000 a year, if you're single or the head of household, you cannot contribute into a Roth IRA. I'll leave a link to the exact article on Roth IRAs that you guys can reference after this video in case I just missed anything in this section.
Understanding the power of Roth IRA can significantly boost your savings potential. This clip walks through how you can unlock tax-free growth and what limits to keep in mind. Imagine combining the benefits of a Roth IRA with the security of precious metals, like gold and silver from Augusta Precious Metals. At the end of the day, smart investing is about understanding your options and diversifying to protect your wealth. Whether it's maximizing retirement accounts like IRAs and 401ks, or safeguarding your future with tangible assets like gold, making informed decisions is key. Remember, companies like Augusta Precious Metals make it easy for you to invest in gold and silver, ensuring your financial future remains secure. If you're ready to take the next step, click the link below to learn more and start investing in precious metals today. Check out our channel and other videos to learn more about investing in silver and gold. Don't forget to like, share, and subscribe to our channel.